Nasdaq pulling back after hitting a record high earlier today. Investors, of course, bracing for Nvidia earnings tonight in overtime, and concerns grow about the sustainability of this AI-driven rally. Joining us now is Glen Kacher. He is the founder and CIO of Light Street Capital. It's good to see you again. Welcome back. I'm curious, are you nervous? Are you confident? How would you describe yourself ahead of Nvidia as a shareholder?
Yeah, we're feeling really confident. We've been investors in Nvidia steadily since the fall of 2022, and we saw the beginning of this AI build out happening then. And you know what, Scott? It's still going on at a very rapid pace. Right now, it's pretty clear that we're experiencing a period where demand is still greatly outstripping supply. And you know, I think you see in these build outs when the architecture of computing kind of changes every 20 or so years, you see a very rapid kind of 5-year investment cycle happening. And then ultimately kind of a 20-year cycle that where we're continue to rebuild and replace over $1 trillion of data center infrastructure. So this, as the cycle ages, we're going to see some ups and downs, surely. But right now, we think we're in the really sweet part of that investment cycle.
I think most people would agree with you, which is why it's not a great surprise. And that leads to my question of how much do you think is already in the stock, given what you said and the broad consensus that your view is the correct one?
Right. Well, look, I think you'll be surprised. You know, here's a company that's the most prominent display of AI. They're greatly leading the race here with over, let's say 85–90% market share, I think is, to be conservative. And it sports, it's roughly at a NASDAQ kind of multiple, and it trades at well less than a half PE to growth ratio. And it's one of the greatest investment cycles we've seen since the beginning of the internet. So we don't focus on one-day trading and short-term profits, but we look at this and say, gosh, it looks really tasty over the next several years. I mean, if you look out to 2025 numbers, it's pretty clear, or should be pretty clear, that those need to come up quite a bit. We'll expect tonight things to, they'll probably beat the Wall Street number by a couple billion. That'll probably lead to a raise of next quarter's expectations by a couple of billion. And if you look out to next year, I think numbers are way too low for this company.
It was an interesting week, obviously, on the AI front. We got stuff from Alphabet and Microsoft, and spoke with one investor yesterday who almost described, what Microsoft had to deliver this week as a non-event. It's somewhat disappointing. Ho-hum. How would you view Microsoft versus Alphabet, considering you own both? One sort of controlled the narrative, still figures to be in the leadership seat. The other stock has done, and that's the other being Alphabet, has done quite well in its own right and has made it clear that it's not going anywhere.
Yeah, both companies are in similar positions where they're trying to build more software solutions for their customers and get those AI revenues going. But, there's a misperception always, I think, in the investment community that things happen very fast in technology. It takes years to build out great pieces of software, to install them and to tune them and to get them running on the customer's data and then to get the returns from them. And so I think both companies in their respective areas are in this period, and some investors will lose patience. That's the tension of investors in this segment, that they want to see those revenues today, but it takes time. And, I think both companies are doing a pretty good job. I wouldn't call their development ho-hum. And, we've seen CapEx over estimates for 2024 up 50% for Microsoft as they're building for the demand of their customer base to use AI. And the combination of Meta, Google, Amazon, and Microsoft, they're going to spend almost $200 billion in 2024. And they're going to spend, almost 50% as a group, 45% more than they thought they were going to spend back just a year and a half ago. So there's an investment period. You have to keep patience during that period in order to make the money over the long term from this amazing trend that we're seeing.
So do you still think that mega cap tech is going to be the outperformer?
Absolutely. And you know, if you look at it, there are only a handful of companies that have the capital, the customers, and the customers' data, and that gravity that data brings in order to provide these AI solutions. They aren't cheap. And if you look, you know, if you listen to each quarterly conference call, you'll hear Mark Zuckerberg from Facebook, Sundar from Google, Satya from Microsoft, Elon from Tesla, of course, Larry Ellison from Oracle, publicly appealing to Jensen, the CEO of Nvidia, to get more chips. The Nvidia chip is the most strategic piece of the AI solution. And so I see Nvidia being, you know, the biggest winner from the infrastructure build out, and then I see those hyperscaler companies and the very large internet platforms as being the only ones that can invest at a scale to really bring these solutions to their large customer base.